Welcome to Academic Gain Tutorials. In this video, we will look into the differences between cash flow and free cash flow. Cash flow represents the movement of cash both into and out of a business over a period of time. It encompasses all cash inflows and outflows from operating, investing, and financing activities. On the other hand, free cash flow, in short FCF, is the cash remaining after a company has met its capital expenditure needs. It's a measure of the cash a company can use for discretionary purposes, such as debt repayment, dividends, or further investments. So, let's look into the basic differences between cash flow and free cash flow in a tabular form. Difference number 1. Cash flow refers to the total inflow and outflow of money from operating, investing, and financing activities, whereas free cash flow represents the money left over after all capital and operational expenses are deducted. Number 2. The purpose of cash flow is to understand the real net cash movement of the business, whereas the purpose of free cash flow is to help investors assess the company's valuation. Number 3. The scope of cash flow is broader since it includes all business activities, whereas the scope of free cash flow is more limited and focuses mainly on operational efficiency. Number 4. Cash flow is calculated by adding operating, investing, and financing cash flows. On the other hand, free cash flow is derived using EBIT, tax adjustments, depreciation, capital expenditure, and working capital changes. Number 5. The calculation of cash flow becomes complicated when there are numerous cash and non-cash transactions, whereas free cash flow becomes complex due to the multiple adjustments required before using the formula. Number 6. Preparing a cash flow statement generally takes more time due to the categorization of various activities. On the other hand, free cash flow can be calculated faster if all data inputs are available. Number 7. The key components of cash flow are operating, investing, and financing cash flows, whereas free cash flow relies on earnings before interest and taxes or EBIT, depreciation, capital expenditure, and changes in net working capital. Number 8. Cash flow is widely used in financial accounting and internal cash management, whereas free cash flow is primarily used for business valuation through discounted cash flow, in short DCF, models. Number 9. Cash flow analysis depends heavily on the cash flow statement derived from the income statement, whereas free cash flow also requires income statement inputs, but filters them differently for valuation purposes. And difference number 10. From an investor's perspective, cash flow gives a picture of the company's liquidity and financial health, while free cash flow reveals how much value the company can return to shareholders or reinvest efficiently. So, these are the differences between cash flow and free cash flow. If this lecture was helpful, give it a thumbs up and subscribe to the channel. Thank you.